Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to continue on the art of financial guidance, and we're going to talk about catalyst pathways. So for public companies, a lot of times valuation and investor interest is more than just plugging numbers into a spreadsheet to drive a valuation. If you're a pre-revenue company, how do you get investor interest and improve your valuation? Well, the answer is a well-defined catalyst pathway. And the best example are development stage biotech companies. What these companies have to do is they have to develop a catalyst pathway of each clinical trial readout at phase 1, 2, and 3, and then the approval, PDUFA approval. And what this represents is a series of essentially binary events over time that will unlock or change the value of the company as you're either successful or fail at each one of these data points. And this is really an important practice that can be applied to any industry, that the more you are able to develop a well-defined catalyst pathway and extend that timeline over several quarters or several years, and then relentlessly update that catalyst pathway, you're going to drive investor interest and you're going to help improve engagement with your stock. The key is the more data and longer the timeline, the more engagement and interest you're going to attract. And then what you need to think about is you need to trade stability for volatility, meaning these series of binary events, to keep investors engaged over time and really give yourself an opportunity to reset that stock price higher when you're below $5. And if you're one of these companies that's stuck under $5, the best practice to really drive engagement and interest is to do an analyst day. A sub $5 company that can provide some long-term financial targets in a well-defined catalyst pathway is going to signal to investors that, hey, this stock is going up, you need to be interested, you need to buy us. And the way you sustain that success is if you can continue to update and provide new information to extend that catalyst pathway timeline over the quarters and years as you go forward. So remember, if you can provide a well-defined catalyst pathway with a decent amount of time ahead of it and a lot of opportunities to provide an inflection point for value, the more engagement and interest you're going to drive from investors. So thanks for watching. Always here to help you with your capital markets, investor relations, and corporate finance needs.